Cryptocurrencies are rejecting at a key tipping point right now, and the time is running out to get above these levels. Let's have a look at that in today's video, going across the cryptocurrency market caps, the rejection support zone for BTC should this market continue to break down, and of course the ongoing everything bubble around the world with asset prices closing at new all-time highs. You've reached your home of macro cycle analysis. Hit the like button, subscribe to the channel if you haven't already. Let's dive into the week that was, looking at the headlines for the week. So let's start off just with the traditional markets, looking at some key points here thanks to Sentiment Trader. New 52-week highs to continue to spread. The main objective here is that we are macro bullish. We're seeing these markets continue up as we have done for the last couple of years, while the masses were talking about recessions and depressions and looming this and looming that. We've been discussing how the lows were formed. You can see how the lows are formed on extreme fear. Markets have risen from that point, and so now we look out for extreme greed. We haven't seen that in the traditional markets yet. We have seen glimpses of it in Bitcoin and crypto. It doesn't mean the cycle is over. Maybe it's just time to cool off, and that maybe has turned into almost a definite with a considerable time down compared to what we have seen in the past already on this significant move. But we'll get to that in just a moment. The good news is the everything bubble is still on. Prices will go up based on what we're seeing here in the markets. 52-week highs continue to spread. Positive momentum's trickled down to many other industries, which is a good sign. Big tech has been strong, so a lot of those top tech stocks have been going up, and the move has been relatively quiet. Like I've definitely noticed that across Twitter. You don't hear about it as much at the moment. Traders are pricing in quiet trends across asset classes. So typically when it's a quiet trend, it can continue on because the masses are still trying to figure out what they do with their capital, as I'll get to in just a moment. The average energy stock has broken out into new highs as well. German stocks are still going up, so another big economy around the world. The sector is also entering a positive seasonal window. I'm a little bit more skeptical on that, but the charts have not turned down. Copper has had a good run. Typically with copper, the economy is doing well. There's copper in a lot of products that are used, and you'll typically see that price go up. It's not always a guarantee, but you'll typically also see that go up. So new highs continue to spread. There's an expansion across many industries, and it's looking like it's cyclical as well, as we've discussed with the S&P 500 when we see some of those corrections along the way. When this happens, S&P, after a percentage of annual highs for discretionaries, financial, industrial, a lot of sectors exceed 25% simultaneously. The results of 14 signals are very positive 6 to 12 months later. Essentially, all this is saying is the bubble continues, prices continue to go up. Yes, there might still be some inflation, but what are you going to do with your money? You got to put it somewhere. People always point back to, well, inflation is here. It's just going up because of inflation. No shit, Sherlock. Of course it's going up, but what are you going to do with your money? You can leave it sitting on the sidelines and get eaten by inflation, or you can get it into the markets. And this is where things get a little bit tricky because it is now grinding up into new all-time highs, and many are waiting for the corrections to come. And if they don't come, well then, like we've discussed on previous videos, they look to the laggards. Just like they do with cryptocurrencies, they look for those weak things. These little weak things over here, I'll get into that in a moment, just to trigger a few first up, especially the XRP holders. Anyway, looking at the laggards to hopefully gain back some of those gains that they've missed out on with the stronger sectors. So as we talked about yesterday, this is something to keep in the back of your mind if you're starting out trading or investing. You've only been in the game for a couple of years and you haven't seen how these cycles progress. That's what the amateurs do. They jump into the weak stuff hoping for it to pump as much as the stronger stuff. Typically it doesn't, and then when everything rolls over, they're left holding the bags of absolute dog shit. So in here, inexperienced investors will chase the laggards. They were in cash for too long, basically waiting for that recessional crash that had been promised throughout 2022 and 2023. Even if there was a recession or a technical recession like we saw with Germany, France may have been in one, and also the UK, guess what their stock markets did? Where you want to be putting your money to invest, their stock markets, new record all-time highs. This was recession. This was another recession. Germany said, screw it. Prices are still going up. We're putting in macro higher lows. We don't care about your recession because money has to go somewhere at this stage of the cycle. France also, new all-time highs this week, slightly lower close than last week, but it's in new all-time highs. Australia has done a very similar thing as well. Let's have a quick look here for the Aussies. New all-time highs in that everything bubble, second highest close of its entire history. Anyone from the UK watching, you guys had a fantastic week and you are now less than 1% away from a new all-time high. Japan skyrocketing, new all-time high after 34 years, the ATHs, and India also having a slight pullback here and a little bounce back to the upside. So the emerging markets, basically your shitcoin market of the traditional world. No offense to any Indians watching, it's just the emerging markets. So that's where we sit. Prices look pretty good over the next 6 to 12 months, and anything in the short term, basically flip a coin. That's not where I like to focus on, but just look forward to those bigger timeframes. Looking forward to the bigger timeframes update on the interest rates. We have started to see them shift a little to the left. So the masses, the economists, whoever puts this piece together for the probabilities are all hoping for a cut in the interest rates. This was about 60 and this was about 30 in yesterday's video. I've just posted this again today. But I'm thinking interest rates are probably, well, the probabilities are shifting to the left. So in the hopes of a cut, towards a cut. If asset prices remain elevated, so real estate and everything has been up and jobs are tight, so the employment market, it's hard to see the Fed cutting rates. Now, there might be many reasons that come up that the Fed might cut some rates and test it out as they had done in the 2000s. Remember, as we went on to that final stage of the bull market, roughly 2002 to 2007 for the stock market, and for real estate, the peak was 2006, similar time period, they did raise rates, cut them slightly by just one cut and then pause for a bit and then rise those back up. So there have been cuts, but I think if that is to be the case, it might be short-lived through this last period of the everything bull market. So we'll keep an eye on these interest rates as the probabilities are shifting a little to the left at the moment, and it's still just the 3 cuts that they're hoping for. After the beginning of the year, they were looking for 8 cuts, a cut every meeting, which didn't happen. So in terms of the stock market for the week, record highs, as I went through with the charts there, basically around the world. Again, record highs. Our everything bull market is really getting heat into it, but I don't think we've seen the crazy mania stage yet of that peak. We're looking out for the winner's curse phase as we lead into that final peak of the market. We've also seen the NASDAQ push into fresh highs. This is the highest weekly close in history, and it also put in a new fresh all-time high. Now, if we look at some of the fractals from the past, let's take this one here. This is from the last phase of the bubble in 2007. We did have the bubble blow off top here into the 2002 low, but this is the final leg of the real estate cycle. All right, so differentiate those two in your mind, and the NASDAQ was lower in that case. Using a bit of a fractal here, it's broken through to a new all-time high much earlier. Well, I mean, in the past, it didn't even break through it in the previous cycle. This time around, however, it has done. So maybe we're going to see even more explosive prices than what we did previously because of the strength breaking through those levels, and now we're in price discovery. And so those laggards are basically waiting for these sort of pullbacks, hoping to get into the market, as there is a lot of money sitting on the sidelines here. Investors have stockpiled a record $6 trillion in money market funds due to the sharp rise in interest rates. So interest rates went up. They hoped this would cool things off. I guess people have got some money sitting in the money market funds to hopefully get this 5% interest rate. Meanwhile, what they are missing out on is this. They're missing out on 24% returns from 2023 to take home 5% because they were fearful, I suspect, of recessions, crashes, collapses in 2023. That's what we were told was going to happen, especially with the banks going down. None of that panned out. Not saying it won't happen later, but it didn't happen. And then typically this is likely, in my opinion, going to continue fueling the everything bubble as they see these markets rise doing 10, 20, 30% per year, and while they're sitting in their money market funds for 5%, they're going to realize that they are losing out to these huge gains to the upside. Typically what happens as they see them go up further, they get in too late. You've seen it happen across crypto and Bitcoin, if that's your main area, but it happens across all markets. The same deal's happening in real estate, as we've seen with the first home buyers trying to get into the market, the government giving all sorts of tax incentives, and they're all freaking out. The younger folks, 30 and under, are getting screwed, or will, I believe, get screwed by their governments to get them into the market because they're all freaking out thinking they can't afford a home anymore. And then the cycle turns, they're getting in at the end of the cycle. Remember, real estate has been going up since 2011, 2012, back at these lows. It's done over a decade of gains. And unfortunately for these young folks, they are going to get destroyed. And I say young folks, I mean, I'm only 38, but you get the deal. Basically young investors who haven't been around to understand where they are in the cycle. So I hope you can share this content with a friend. That's the main focus of what I want to share with people, is understanding the cycle so you don't get destroyed at the peaks when all of the handouts are being given, so that it makes it easier for you to get into the market. It's always easiest to get in at the peaks and hardest to get in at the lows. They'll take away the interest, the tax incentives. This is the government and the banks. They'll tighten the lending standards. And then potentially a lot of people won't have jobs or as higher paying jobs as what we have leading into the peak. So when the market comes down, it's much harder to get into the market. So it's a difficult time. I just want to share the message with everyone. Subscribe, like, do what you got to do, and just be careful of this everything bubble and how it unfolds in the coming years. The US dollar has also continued up, which, at least for Bitcoin, has been putting some pressure to the downside. The stock markets haven't really noticed the move to the upside here in the short term, broken past our short-term 50%. Again, the level to watch is 105 across the top here for the US dollar. If there is some more strength here, which would potentially put some more pressure onto asset prices. Again, haven't seen it for the stock market, but if we're mostly interested in crypto and Bitcoin, this is the chart I'll be watching here of the US dollar. Speaking of which, here we are for BTC, trying to get a close above 63,000 today. A couple more days to go to close out this week. Short term, looking at this zone right here, 59,000 to 62,000. That was that flash crash of $10,000. 59K was the low. And then our recent low on the 20th of March was roughly around $60,800. I am looking towards this particular swing bottom. You can see we got so close to that now. I think if we break that and close underneath it on a 4-hour chart, probably likely we'll come back and test that $60,700 low. But a 4-hour chart closing basis there underneath this swing bottom would potentially show some short-term weakness to come back and test these levels. In the meantime, if that holds up, this could just be another grinding correction for BTC. Nothing too bad at this stage, but if that breaks down, the range that I'm looking out for is mid to high $50,000. Nothing out of the ordinary. If you look at any sort of corrections from 74K down to 59, 20%. Bitcoin's done that many, many times before. I don't think it's anything to freak out about. 22% takes you about 57.5, and something to exceed what we have seen before, back to these previous tops here, roughly 52, 53, it'd take you up to 28%. So not even a 30% drop. 30% would take you underneath 52K, still well within the zone, provided it doesn't close in there. You're still in a very healthy correction for Bitcoin. I'm not saying it gets there, but you can see the amount of potential downside that Bitcoin could go through, and it would still be okay for the rest of this cycle. It'd still be okay that we see the wave 4 put in. Hopefully it takes a good amount of time before we see a nice massive pump to the upside. That's looking at that wave 5 that I talked about from Michael's video, which you can find a link to in the video description. Speaking of which, check out the free TIA report and you'll be on the wait list for the Ultimate Traders Accelerator that's coming out very, very soon. Link to that will be in the description. Just sign up to the newsletter and you'll be notified when that is available. So onto the longer term here, and I'm just going to cover this one quickly before I get into the altcoins. something to pay attention to because of these tops. Things got out of hand. Middle of this week, the emotion was running hot just on the titles. Friggin' hell, words. You really need to check yourself when you get triggered on words. Looking at tops and how do they develop, most miss them because of that extreme motion. They can't believe it. Now, I'm not saying that this is the final top for Bitcoin. Like this, I don't think this is the final top here. I'll get to that in a moment. But a quick one here. Look at how these tops are formed. I've got a couple of points here. Explosive move to the upside. In all these cases, they've pretty much been explosive moves besides the November 2021 top. But it's important to have a look at explosive moves, especially for altcoins. High volume. Much, much higher volume than what you see previously. It gets into that peak of volume, swing chart breakdown, and momentum shift. There is our weekly swing chart, our Gann swing indicator, 7-day free trial, link in the top of the video description. You see the breakdown, and typically from that point, the momentum shifts, and it shifts pretty hard when it comes to the market sentiment. But you can see from a technical point of view, an objective point of view, the shift has occurred. There is a breakdown of the swing chart. There's no feelings in that. It's just that breaks. Probably, more than likely, the sentiment is now shifting. So I've just got a time frame here, roughly 18 weeks from that move from extreme volume as the market rose with extreme volume, the breakdown, the high volume, the explosive move, the swing chart breakdown, and momentum shift, about 18 weeks. So about your 4-month period there. That's the bar that I counted it to as the breakdown. Having a look at a couple of others, about 16. Look at the volume. You can see the explosive move into the top. You've got to break down a little higher up here because the next breakdown was further out and a long way down. So you've got to break down roughly about here, 27 weeks, but you've gone from 1200 to a breakdown of 400. So there's a long way to go down there. We can discuss why that would be a good area to break down. You can see some of the volume pickup as it breaks those levels at about 650 to 700. Anyway, the point being, you're about 14 weeks, so about 3 months, 3.5 months. Got another one here. There's a breakdown. There was the volume compared to it before. 17 weeks, 3 to 4 months, 3 to 4 months, maybe 4.5. Another one here, 3 to 4 months. Another one here, 3 to 4 months. This peak into 2017, a little different to those, but you can still see the move to the upside. You can see the weekly breakdown, and you can see the momentum shift as it came through in late November and December. Really just shifted off from that point, lower top, and then the next breakdown again. So if you wanted to measure out to that final breakdown, guess what? 15. So about 3 to 4 months. If that's the case for the tops come in and they can take some time. All I'm suggesting is they can take some time. This is for later. Relax for now. It's all good. But for later, this is why most people will miss the top because they're too busy getting all hyped up and excited. And before they know it, the collapse comes and they get absolutely wrecked. Essentially, in that Wyckoff terminology, it's like a gotcha bar. People have been sucked in and then gotcha. Now you're sucked into your position and you can't get out. Well, you can sell, but the majority won't want to sell because they see their position at such a loss compared to where they got in. And we definitely know that from 2021. There were a lot of people getting in here in the 50s hoping for 80 or 100 grand, and bam, that got them, cut them out. I remember that very, very vividly to understand how those tops form, and people just don't see it coming. Not saying now, relax, it's just lessons for later on. Like we went through some lessons here, the defensive and offensive, looking at market cycles. So in terms of the overall here, looking at the monthly turning points, we've done 6 months up, higher highs, higher lows, if you want to count the bottom at 7. And we've looked at the probabilities here and the timing of these cycles. Typically around now is where the market would at least pause in the past, April, June period, right? It has come back in the past. That's a 40% drop, but it still remains elevated compared to where it was, consolidates to move higher. So no way are we saying that this is the final top. It would be nice for some consolidation here. We've looked at price points to the downside. The tipping point that I've talked about for cryptos has also rejected there, which we'll get onto in a second. No thanks to XRP, mind you. But essentially, just looking at the past, this seems reasonable. So we've got another 9 days to go to close out March. If it's underneath the previous tops, then you're probably looking more towards the the correction lasting a little bit longer here. Should we break above and close above that 69 to 70,000 by the end of the month, that looks like this pump could continue on for another month. Maybe do what it did last time here, like in April 2021, where it just puts in a higher high and then finally has a bit of a pullback. That was April 2021. Now we've got altcoins to get into. First up, shout out to our traders, smashing it, shorts, longs. This is TIA Premium. Links in the top of the video description. Well done, hitting your 20 and 71%, another 300% here. Congratulations to you guys. So the tipping point for altcoins, no thanks to XRP.
I'm doing my part.
I'm doing my part.
I'm doing my part. I didn't do fucking shit.
The total cryptocurrency market cap, excluding Bitcoin and ETH and the stable coins, has reached the tipping point here. $650 to $680 billion. That was the previous monthly swing top before the collapse. I don't think this is about to break down underneath key support levels. We have done about 22% down from that top. And just looking at previous corrections along the journey here to the upside, you've had 7 weeks down, 9 weeks, 13 weeks to this little higher low, 4 weeks here. So if there is to be a bit of a pause, it's not going to be the end of the world. Check out the pause that we had in January. That led to a nice big pump. So pauses aren't a bad thing. They're only bad if they break down past key support levels. And we're a long way from this key support level, roughly around 300 billion. I don't think we're at that stage of the cycle yet where this market's getting ready to break down, put in a lower high and come underneath. It could happen. I know the bears out there would probably expect that right now to happen, but I don't think we're there just yet. But just looking at these time frames, 4 weeks at the shortest length, maybe around 13-ish weeks. People get crazy even if you mention something that long, but it's just to keep it in mind based on what the market has done in the past. And these numbers do continue to repeat time and time again. You can go back and test them along here. 1, 2, 3, 4, 5, 6. 6 weeks down, 1, 2, 3, 4. There's about 10 weeks to that bottom until the market went on its final leg. There's a week down, 2, 3, somewhere around 2 to 3 weeks in this period. It just happens time and time again. So don't ignore those levels if this is in fact a pullback period to consolidate, as we've been rejected from that tipping point so far. Ideally, we want to see something above the 50%, around 580 billion, but I don't think in this case it's going to be the worst thing if we consolidate, provided we stay roughly around 450 to those previous bottoms and tops there at about 400. So sort of 390 to 450 billion. And that would be a percentage drop, about 30 to 40-ish% on this total cryptocurrency market cap minus Bitcoin and ETH. So we're still within a pretty safe zone. I'm just saying that this is the extent, the limits of a potential safe correction. Now you want to be in something strong when this does eventuate. Now XRP could go up, and yes, I keep going on about it. It's just a fantastic example so you don't get destroyed in the markets. It's currently at 60 cents. It was at 60 cents 6 years ago. You do you. Even if this thing comes up 120, 130%, it still has these levels at $1.40 to contend with. So there's some overhead resistance. It still has roughly $1.80 to $2, which I remember in 2021, that was the extent it got to. So that's a 200%, 220%. And going back to the 2017 peak where a lot of people got destroyed, absolutely destroyed at $3.50, 470%. Now compare that to something a little easier like Solana, which is getting very close to its all-time high already. What you want is something that's getting into or near its all-time high, getting into that stage, because then you get into this price discovery. Price discovery is the easiest place to make gains, basically buy high, sell higher. But if you still have a lot of overhead resistance this late in the game, you know, the season it is, then you're going to have more difficulties trying to reach that point. For whatever reason, it doesn't comprehend with XRP holders or any of these sort of old crypto holders. They just see a 6-year consolidation period and they expect huge $589 targets. We'll let them do that. Just focus on easier things. Why make the game harder for yourself when it's already difficult as it is? Solana, tipping point, rejected. We still have the monthly swing top previously to contend with as well, to the downside. That's 34%. So still very well within reason for any sort of correction here. Not saying it gets there, but you can see it's done in the past already, 37% to the downside and still remains healthy. That's what you want to look at. You don't want to see stuff that drops back underneath previous old all-time highs or goes underneath weekly swing bottoms. That could be a recipe for disaster. So watch out for that, especially if you want to be consolidating, buying up altcoins for this next stage of the pump. Thanks again, guys. Have a fantastic weekend, and I'll see you at the next video. There we go. Until then, take care and peace out.